Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis, Thursday, November 6, 2014. You're looking at a daily chart of the SPY, and we had an update today. The S&P was up about 7.5 points. The Dow was up about 70 points, and NASDAQ was up just short of 18 points. A couple of days ago, I gave you a number, and I used the E-mini futures contract for the number, and I gave you a number of about 2030, 2032. And we're just about there. We hit 29.50 today. That's close enough. We'll probably spike up a little bit in the morning to hit that number. But for every number, there's another number. So I don't want you to think the market's just going to turn down. There's another number that's about 20 points higher, 2052 in the S&P E-mini contract, which would put the S&P contract not that far from that number, maybe 2046, something in that neighborhood, 2047 as it stands right now. So not to say that's going to happen. I'm just saying once we reach a number, if the market stays bullish or stays buoyant, then the other number, the next number up, comes into play. And so what I want to stress is while the market is way overextended, this is a ridiculous move, it's way overextended, but we know the market can go higher than people think and it can go lower than people think. Right now we're in the it's going higher than people think mode. So we're getting close. However, there's still some upside numbers, and we may or may not hit those numbers. And if we get into next week and we haven't hit those numbers and we begin to turn down, that's probably a good sign that the market's going to give in a little bit and start somewhat of a correction. So that's kind of where we stand. Nothing's changed except we floated up a little bit today. There's a number that's important on the upside if we remain buoyant, if we remain up. So we'll see what tomorrow brings. There's a non-farm payrolls report in the morning. That always whips the market around for some reason, even though the number is not a real number, right? It's A, it's an estimate. B, they tell you that the margin of error can be like 150,000 jobs, and the number comes out like 220. So if it can be 150,000 job margin of error, they have no idea what the number is. It could be 375 and it could be 150. So who knows? They don't have a clue. Anyway, but nevertheless, the market participants wait for the number. The market reacts on the number. It goes up, it goes down, it goes up, it goes down. It does whatever it's going to do. It'll settle in. And under normal circumstances, Friday would normally be a very light volume day. And as the day goes on, the volume dries up even further. And then if it's a buoyant day, meaning the market is remaining, at least slightly up, you would look for a float up at the end of the day, similar to what we had today. That's typically what we would see. We'll see what tomorrow brings. Let's go over to hit the gold market. And gold was basically flat today, nothing going on there. We're still looking for one more down move in gold, at least for the interim. We're looking for a little bit of a washout. I'm looking for a nice $20 down day in the price of gold. It's 1140, 1141 right now. And if we get that on high volume and we reverse, that'll be our signal. But we can't know it until we see it, and we can't act on it till we see it. So we won't know until we get there. But that's what I'm looking for in gold. But it's stalled out today. But another stall out day, and then it would be putting in like a sideways, bearish pattern here, and then it may go lower, just like it did here, right? 1, 2, 3, lower. 1, 2, 3, lower. Maybe we'll see. That's what we're looking for. Oil is also struggling. It's set pretty solid beneath $80. And it's 77.73 as we speak. I think we're due for a bounce in oil. We almost hit that $75 target. We didn't quite get there, But I think we make another run at 80, and then we probably turn back down. There's really almost no way to trade oil down at these levels. You're not going to short it down here, and it's too dangerous to go long because if oil gets moving on the downside, the shorts will pile in and they'll drive it down $2 or $3, and you don't want to be caught in that mess. So there's no trade, there's no setup, there's no you know what? Let me bring up the USO chart. I forgot. I'm sorry, folks. There's really no setup. I mean, the USO chart may have made a bottoming tail here, a small bottoming tail the other day, but until you really bust through this red bar high here, there's nothing going on. I mean, you may get up to this level, and that would probably coincide with a 79 and change dollar barrel of oil. And if you can't get through this 20-period moving average and this high here, then it'll probably turn back down and there's nothing going on. So that's a story in oil. It's just a tough trade right now. There's just no way to trade it. What else do we have? Basically, that's it. Nothing's changed. The market's grinding. First we're waiting on the election. Then we're waiting on the jobs report. We're waiting on the ECB today. They didn't say anything. Mario Draghi, he said some stuff, but they didn't do anything. They didn't do like what the Bank of Japan did. They didn't do what the Fed does. They just jawboned it. They talked about it. He talked about it, but they didn't do anything. So, now we're waiting on the jobs. Every day we seem to be waiting for something else. Who knows? Basically, when the market decides it's ready to turn down and correct some of this overbought condition, let's go back over to the SPY. When it decides it's ready to relieve some of this overbought condition, it will. And it'll tell us when it's ready, and it'll tell us when it's about to do it, and then it'll tell us while it's happening. And then we're going to try and pick a level that it should go to. 194, not 195 is my target here, but that may change based on what's happening as it's going lower, if and when that does happen. And then we'll adjust accordingly based on the type of move that it comes into those numbers. Do we get one of those huge down days? That would change my tune a little bit. A huge down day usually means there's more coming. But if we get, a series of 5 or 6, smaller down days of 15, 18, 9, S&P point type days, that's probably going to stall out at 194, 195. Put in some kind of a low and then maybe set up for an end of the year rally, and that's kind of what I'm looking for. But we have to see it before we have to see how it gets there to determine whether there is going to be the final spot. And we'll just play it by ear and we'll see what happens. Right now the market's not turning down. Right now the market's in bullish mode. Okay, let me just show you something. Let's move over to the weekly chart, and you see this here. Okay. Puts in a bottom. This is a tail. Huge volume. Okay. Then you have one big up week, two big up week. You could wind up this third week, and that could be the end of the move. A 3-week move, not including the reversal week. That could be the end of the move. But we'll see what happens. We have to see where the week closes tomorrow. Okay, and then we'll make a determination from there what happens. Even if we go out longer, okay, there's nothing wrong with this market. As long as you stay above these moving averages, and the 20 and the 50 period moving average are nicely spaced, both in an uptrend, there's nothing wrong with this market. This market's not going anywhere substantial anytime soon, as long as these moving averages look like this and this looks like this. However, that being said, make no mistake about it, there will come a day when this entire move gets retraced right down here. And when it gets retraced right down here, it will happen hard and fast. But it's not ready to happen yet, and we'll know it when we see it. But right now, we're in float mode. And until further notice, that's the way it's going to stay. We'll see what tomorrow brings. We'll come back and we'll tell you what's going on then. Thanks for tuning in, folks. I'm David Frost, mystrategicforecast.com. This was another episode of Common Sense Market Analysis.